Today, Ripple scores another court win as a judge denies the SEC's appeal in the XRP case. And it's day 2 of the Sam Bankman-Fried criminal trial. We bring you the latest and talk to Zack Shapiro of Reins about what this case means for the crypto industry. Welcome to CNBC's Crypto World. I'm Jordan Smith. Cryptocurrencies were mixed Wednesday morning, with Bitcoin hovering right around the flat line as of noon Eastern. Ether, meanwhile, getting knocked down about 1%. XRP, though, getting a boost up about 4%. All right, let's catch you up on the top stories, including one reason why XRP is on the rise this morning. District Court Judge Annalisa Torres just denied the SEC's request to appeal part of her July decision that XRP is not necessarily a security in regard to individual sales. Back in August, the agency requested an appeal of that partial decision, saying it would have an effect on other lawsuits the SEC was pursuing. The agency had to get permission from Judge Torres because the full trial in that case is still ongoing. Well, just yesterday, Judge Torres denied the appeal, finding no, quote, substantial ground for difference of opinion in her findings. So the SEC will have to wait for the full trial to begin in April of next year. Next, the SEC, unsurprisingly, opposes Coinbase's request to drop the agency's lawsuit on the crypto exchange. In a court filing on Tuesday, the SEC reiterated its claim that Coinbase operates as an unregistered securities exchange. The agency pointed to the company's staking program, claiming the product is a security under the Howey test. That's the rule from the 1940s that says an asset that gains value from the work of others is subject to securities regulation. The filing also notes that Coinbase has an inadequate standing on XRP and relies too heavily on that partial court victory in favor of Ripple in July. In the agency's filing yesterday, it claims Judge Torres' ruling in July, quote, explicitly declined to rule on whether secondary market resales of tokens constituted investment contract transactions. In response to this filing, Coinbase's chief legal officer, Paul Grewal, put out a series of posts on X and stated, quote, the assets we list on our platform are not securities and are not within the SEC's jurisdiction. Later in the thread, Grewal stated that, according to the agency's arguments, everything from Pokemon cards to stamps to Swifty bracelets are also securities. Finally, it's day 2 of the trial of Sam Bankman-Fried. The court has picked its jury and opening arguments are underway.
According to the CNBC reporters in the courtroom, prosecutors told jurors that evidence will show SBF stole billions of dollars from thousands of investors. His defense, meanwhile, told jurors he was just a math nerd who didn't drink or party, and just because people lost money doesn't mean he committed fraud. Along with the opening arguments, witness 1 is expected to take the stand this afternoon. At the same time the trial is kicking off, the DOJ and SBF's lawyers are sparring over how SBF can defend himself. Bankman-Fried's attorneys asked the judge to reconsider an earlier ruling that precluded them from arguing SBF is not guilty because FTX was not regulated in the United States, and he followed the rules with respect to FTX US. In a new filing this morning, the DOJ says that U.S. laws are in fact enough to bring the case to trial, and that U.S. law prohibits misappropriation of customer assets.
Let's keep talking about FTX and Sam Bankman-Fried's trial for our main story. Yesterday, as the trial kicked off, Crypto World's Talia Kaplan spoke with Zack Shapiro, managing partner at the digital asset-focused law firm Reins. The two of them discussed the implications of this case on the industry.
Many people are paying attention to Sam Bankman-Fried's trial, which kicked off this week, yourself included. It has been about 11 months since FTX filed for bankruptcy and SBF stepped down as CEO of the now bankrupt crypto exchange he founded. What was your reaction when that massive failure first happened and when the world learned that SBF, who was once hailed as the white knight of crypto, was in some serious trouble? What message did that send to the crypto industry?
I think it sent a couple powerful messages. One was that it's really difficult to have heroes in this space. I think SBF is someone who came out of nowhere. He didn't really have a background in crypto that went that far. He appeared on the scene, raised a ton of money, built a really powerful brand in the bull market. And then all of a sudden, he had powerful institutional investors and folks in media who were hailing him as the golden boy of crypto. I think that was more the case from those players than it was from internal crypto industry professionals. Not to say anyone saw this coming, but I think one lesson here is that just because someone is charismatic and gets trusted by institutional investors and reporters does not mean that they are someone who's running the industry. The second thing that really was remarkable is just the scale of what happened. We went, I think, within a week from a media report about Alameda, which is the hedge fund associated with FTX, having a balance sheet that was overweight on FTT, which is a token tied to the success of FTX, and then news that CZ, who is another crypto exchange leader, selling FTT to rumors of bankruptcy with some of the FTX entities to an $8 billion hole. And it happened so quickly. It was just a lot to take in, and incredible how quickly things move in this industry.
Here we are, about 11 months since FTX filed for bankruptcy and 10 months since SBF was arrested. What do you think has changed in the digital asset industry between then and now? Obviously, the collapse led to a huge erosion of trust in crypto, but what do you think were the lessons learned from that massive failure in terms of regulation? Did it highlight the fact that regulation was really needed?
So at the time that FTX collapsed, Sam Bankman-Fried was actually in DC trying to get crypto regulation passed. I think one of the immediate effects that we had of the collapse of FTX and the fall of Sam Bankman-Fried is that DC doesn't see comprehensive crypto regulation as the priority that they did at that time. And I think, unfortunately, we lost the ability to have regulation that would have given us the clarity in this industry that would have been really useful. At the same time, I think that the blowup of FTX really caused a reckoning with the industry about what here really has value, what things are being built that are creating products and services that are improving the world, that are adding efficiencies to the market, and what was sort of bull market fluff. And I think that the collapse of FTX and the decline in crypto asset values really caused people to have to look at what is real here and what was hype.
You're a crypto-focused attorney now, so I'm curious to hear what position you think Bankman-Fried's lawyers will take during his trial, especially since he spoke out publicly at the New York Times Dealbook Summit shortly before his arrest. That's where he said he bears responsibility for the, quote, huge management failures at the company. I spoke with an attorney who argued that because he made those public statements, there's no defense for him anymore, that he did nothing wrong. And the defense is now whether he did something intentionally and fraudulently wrong, or whether he was negligent and engaged in mismanagement short of fraud. Do you agree?
Yeah, I totally agree that the core of this trial is going to be about intent. So in this particular trial, there are probably going to be more charges brought in subsequent trials, but this trial is really about the question of, did Sam Bankman-Fried knowingly commit fraud by taking what were supposed to be customer assets on FTX, the exchange, that were supposed to be held, in segregated wallets for the benefit of the users whose those assets belong to? Did he take those, lend them out knowingly to Alameda, the hedge fund, to essentially gamble them away and use them for improper purposes? And we know that the defense is going to use two theories here. One is to say it's sort of a light advice of counsel defense. He's going to say, look, there were lawyers in the room for all of this. I got advice from lawyers that I reasonably relied on, and therefore I could not have knowingly done this all wrong or committed fraud. And the other defense is that he's going to claim that there was a wall between FTX, the exchange, and Alameda, the fund, that he kept for conflict of interest purposes, and that he didn't really know what was happening at Alameda. So the mismanagement of customer assets on the Alameda side was not something that he, intended or was directly in charge of.
So Sam Bankman-Fried pleaded not guilty to the charges against him, which include money laundering and fraud. But some of his former colleagues and closest friends pleaded guilty to federal charges against them and have been cooperating with prosecutors. They'll testify against SBF during the trial. Key witnesses include Gary Wang, who co-founded FTX with SBF, and Caroline Ellison, the former CEO of Alameda Research, the crypto exchange's sister hedge fund, which you noted. Both Ellison and Wang have insights into the internal workings of FTX. Ellison was once romantically linked to Bankman-Fried and admitted to misleading actions. So how do you think their testimony will impact SBF's case?
Yeah, I think their testimony is going to be incredibly pivotal to the government's case, especially that of Caroline Ellison, who we know there was a recording from right when the exchange was blowing up, when they thought things might be okay because Binance, a rival exchange, could buy them out, that she essentially held a meeting with some of the FTX employees, apologized to them for what was happening, and said that she and Sam had made the difficult decision to essentially reach into FTX's customer assets to, shore up the Alameda balance sheet, and that had caused the shortfall in funds. That is, I think, as close as the government is going to have to a smoking gun as to SBF's intent here. And so I think it's going to be really, really hard for SBF to overcome the power of that testimony. Gary, who's also pleaded guilty to helping create the code that allowed Alameda to borrow such an incredible amount of funds from FTX. I think the best the defense can do here is to point to the likely leniency that each of these cooperating witnesses is going to get from the government and say they have every incentive here to make the government happy to get a lighter sentence. But at the end of the day, I think that's going to be hard to sell to the jury.
We're expecting to hear from FTX victims during the trial. How do you think that will impact SBF's case?
I think that's going to be another difficult factor for the defense here. If the government, does its job well, they're going to find people who are sympathetic cases of they invested their money in FTX. You probably hear from people who saw the Super Bowl commercials, all of the celebrity endorsements, and thought that FTX was the most buttoned up exchange that you could trade crypto on, a safe place to hold funds, and point towards that, point towards the terms of service that say that user funds would be segregated and held one-to-one, and then point to the reality of those same funds appear to have been used to gamble at Alameda and then were lost.
Shapiro also discussed how he thinks the trial will play out, and you'll be able to catch that full interview at cnbc.com/cryptoworld. That's all for today. We'll be back again tomorrow, and we'll see you then.